Welcome everybody. In this video, I will be reviewing a few stocks that were asked by our members in the Info live session. Starting off with HDFC. HDFC is a stock that is non-trending and it's going through a low volume consolidation. What I have observed here is that in the past 1 month or so, all the HDFC group, HDFC Life, AMC, Bank, HDFC itself, have all have the same patterns. And in the lower time frames, I have checked all the three stocks, HDFC Life, Bank and HDFC are going through a bearish trending. When the stock goes to bearish trending, they will fall more. So in lower time frame, the stock is getting very weak. The whole group is getting very weak. So if wanting to invest in HDFC, it's not advisable because it's a non-trending stock and non-trending stocks like to play around in the range where it will kill patience. And also when the whole finance sector went up, HDFC was silent. HDFC Bank also was silent, which proves that probably they are weak. So if holding, can think of exiting as non-trending stocks will kill patience. So to sum it up, HDFC, if wanting to buy, not good because it's a non-trending stock. If holding, it's good to think of an exit. The next stock is Just Dial. Just Dial is a stock that is having multiple weaknesses as it has been moving up. It's going through a small consolidation, then it breaks up, again goes through a small consolidation. The ideal place to exit this stock should have been 3 weeks back, and so if holding now, it is good to exit. The chances of the stock giving a bigger runs will be lesser from here because it's very weak at this stage. As the price has come down, you can wait for some strength build up and then look for buys. That is for when you want to buy, which will take some more time. So to sum it up for Just Dial, if holding, it's good to take an exit. If wanting to buy, good to wait for some more strength build up and correction and then look for buys. Next stock is Cient. Cient is a stock that is very strong but coming down with low volume, and the stock can get into a range here, while due to the strength the stock has, it will only go up from here. The only issue is it will take time, and only if you have patience you can make money from stock like Cient at this stage. Coming to if you want to buy, it's not good to buy at the current levels because it's overbought. You can look for buy when the stock comes below 920, when the stock comes below rupees 920. If holding, you can continue to hold because it's a strong stock. To sum it up for Cient, if wanting to buy, good to buy below 920. If holding, can continue to hold. The next stock is Sun Pharma. Sun Pharma has shot up because of the news-based action here. Because of the results, the stock has gone 10% up yesterday, and it's gone up with big volume. When a stock goes up with big volume, it can have some more upside. So same with the Sun Pharma, as it's gone up with big volume, it can have more upside. While if looking to buy, it's not a good price to buy now, as it is severely overbought. So if holding, you can continue to hold. Since it has gone up with volume, it can have more upside. To sum it up for Sun Pharma, if wanting to buy, not good to buy now. If holding, can continue to hold. Next stock is MCX. MCX is again a non-trending stock that is coming down with volume support, and it is going through a big range which it can take a long time to come out. So the reason why we say not to invest in non-trending stocks is because we can see in this chart here, when the stock went to non-trending, it didn't have any big movements. It played in the same range for the whole of this year. From February, it's been the same way. It's going up down in the same range, which will kill patience of the investors. So if wanting to buy, is not advisable because it's a non-trending stock. If holding, you can think of an exit as non-trending stocks will kill patience. So to sum it up for MCX, if wanting to buy, not advisable to buy. If holding, can think of exiting. The next stock is Havells. Havells is a stock that is going up without any volume support and has been building significant weakness on the patterns. It is good to have a maximum profit booking and carry a light exposure. If wanting to buy Havells, it's not a good option to buy now. To sum it up for Havells, if holding, it's good to have a profit booking and hold light exposure. If wanting to buy, it's not good to buy now. The next stock is Motilal OFS. Motilal OFS is a strong stock that is coming down with volume, and it can have some more correction which can then give a buying opportunity. So for those wanting to buy, it will be a good buy even the stock comes below price levels of 840. and to those who are holding the stock, there is no need to worry because the stops should protect us. To go sum it up for Mozilla OFS, if holding, stops will ensure that we exit and have good protection on it. If wanting to buy, below 840 levels is a good buy. Next stock is Nucleus. Nucleus is a stock that has gone up after a long time of consolidation. For almost 3 months it was consolidating and is now going, and it has gone up where I'm pointing the crosshair. It has gone up with volume support, while after whatever the stock did not show that the stock had any strength in it. So that shows to confirm that the stock is very weak, and it is good to only have a small exposure in the stock. So if holding, it's good to have lighter exposure after profit booking. If wanting to buy, again, it's only good for small exposures. Next stock is Philips Carbon. Philips Carbon is a stock that is going up with volume support, while again it is very very weak as it's moving up. So it's not good to look for buys in a stock like this which is having such amount of weakness. So if holding, you can continue to hold because of the volume support. It can give a little bit more upside. To sum it up for Philips Carbon, if wanting to buy, not good to buy now. If holding, can continue to hold. The next stock is Cochin Shipyard, and Cochin Shipyard is a non-trending stock that has completed its run and got tired, and now it is giving back and going through a low volume consolidation. The stock is almost become lifeless. So let's leave the stock and move on to look at better opportunities in the market. Thank you.